Welcome to D-Risk, a podcast where we provide a no-nonsense analysis of stocks. Today, we're taking a deep dive into ASML Holding, the semiconductor titan. Our data was captured this morning, September 16, 2025, around 6:42 a.m. ET. We're talking about a company making a pretty bold billion-dollar bet on AI, making the digital world even smarter, right?
Precisely. And we'll be digging into our research today to really understand what makes ASML such a linchpin, and the key factors moving its stock.
Okay, let's get into it. So the market this morning looks like a bit of a split picture. Nasdaq's higher, Dow's lagging a bit.
Yeah, let's just say the broader economic landscape is about as clear as mud right now.
Right.
You've got conflicting forecasts, some hinting at a slowdown, others showing, surprising resilience. And with key data like August retail sales due today, the market's definitely walking a tightrope.
So cautious optimism at best.
At best, yeah. Even for giants like ASML, it means navigating carefully.
Speaking of giants, ASML. They really are the undisputed king of these lithography machines, aren't they? Absolutely essential for advanced chips.
Oh, completely. They're the bedrock. And their fundamental story just gets, even more compelling.
You mean the AI partnership?
Exactly. That strategic partnership with Mistral AI, the French AI leader, backed by a massive $1.3 billion investment.
Wow.
And our research suggests this isn't just, a buzzword thing. It's about weaving AI deep into their operations, optimizing machines, predicting maintenance, maybe even personalizing manufacturing. It's a potentially huge competitive leap.
Okay, here's where it gets really interesting for me. Wall Street seems to love this move. Our research shows, 68% buy or strong buy ratings from 38 analysts?
They are definitely cheering. But this is but there's a central conflict here.
Go on.
If you run a, let's say, conservative valuation model, just based on free cash flow, it points to an intrinsic value around $499 a share.
$499, but it closed yesterday at $867.
Exactly, that's the stark contrast. So it begs the classic investor question. Phenomenal company, yes, but is it at an astronomical price?
That is a massive disconnect.
Yeah.
Is the market just ignoring the fundamentals, or is there something else driving that price? Like maybe that AI potential isn't fully captured in the model.
That's precisely the debate. The free cash flow model is solid, but no, it probably doesn't fully quantify the speculative upside of a potentially game-changing AI integration or the sheer scarcity value of ASML's tech.
Okay.
So while maybe not totally irrational, it's definitely priced for a lot of future success. Priced for perfection, you might say.
Right. So high price, exciting story. What's the crowd thinking? What's the sentiment out there?
Well, our research shows the crowd is firmly in the bull camp. Very firmly.
How so?
Look at the options market. The put-call ratio is 0.55. That means far more traders are betting on the price going up than down.
Yeah.
And they're not just mildly bullish. They're setting some pretty ambitious targets. The highest concentration of bets way up at the $1,100 strike price.
Wow, $1,100. And what about the bears? Anyone betting against it?
Practically hibernating. The short interest is minuscule, just 0.76%. Less than 1%.
So almost nobody is willing to short this stock right now.
Seems that way. Popular opinion, at least as reflected here, is clearly pointing in one direction up. It adds to the story, but again, doesn't erase those valuation questions we talked about.
Okay, let's switch gears to the technicals. What are the charts telling us? You said earlier the trend looked strong.
Crystal clear, actually. The upward trend is strong, and it's been accelerating. It's broken cleanly through previous resistance levels, previous ceilings.
And is there money behind the move? What's the volume look like?
Absolutely. Yesterday's big price jump, it was backed by significant trading activity. That tells us there's real conviction there. Money is definitely flowing in.
Right, and momentum is picking up speed too.
It is, which normally you'd love to see. However, and this is the crucial warning sign from the charts, the stock is now technically overbought. RSI, other indicators, they're flashing red on that front.
Meaning
the recent sprint might have been a bit too fast, too soon. It's just we could be due for a short-term breather. A pullback wouldn't be surprising. We're also seeing volatility pick up wider daily price swings.
Okay, so pulling it all together, tricky macro picture, this really exciting AI bet fundamentally, but a high valuation, overwhelming positive sentiment, strong technicals, but with this overbought warning. How do you synthesize all that? What's the strategic outlook from our research?
After weighing everything, our research points to a cautiously bullish outlook on ASML.
Cautiously bullish. Okay, what are the main risks driving that caution?
Three main things. First, that overbought technical condition we just discussed makes a near-term pullback quite possible. Second, the stark valuation gap. It really is priced for perfection, making it vulnerable if anything goes wrong. And third, just the general uncertainty in the macro environment. That could always dampen spirits.
Right. So with those risks, why lean bullish at all? What tips the scale?
Well, despite those risks, a few things stand out. That strategic AI partnership is a powerful narrative, a real potential catalyst.
Okay.
Then you have that overwhelmingly positive sentiment. Options traders, Wall Street analysts, they're all aligned. And critically, the technical picture, despite the overbought reading, shows immense underlying strength. The trend, the volume, the momentum, it's all very powerful.
Got it. So for the next few trading sessions, what key price levels should we be watching?
Okay, the big psychological level is $900. A confident break above that could really open the door higher.
And to the downside, where's the support?
Your first line of defense should be around yesterday's high, $868. That needs to hold. A more significant support zone, though, is near yesterday's low, around $834.
And is that the key level?
Yes, that $834 mark is what we'd call the critical invalidation level. We see a close below $834, it would really negate this immediate breakout momentum and likely signal a deeper correction is coming.
So it sounds like with ASML, you're looking at a thoroughbred horse that's already halfway through the race. The question isn't if it's fast, but whether you're comfortable paying the winner's circle price before it even crosses the finish line.
That's a great way to put it. That's all for this deep dive. Remember, this analysis is for informational purposes only and isn't financial advice. Always do your own research or consult with qualified financial advisors before making any investment decisions. Thanks for tuning in. Catch you in the next one.